Morning, everybody. Today is Wednesday, March 4th. Good morning. And let's see what we have on the docket for today. Market's trying to find their bottom, it looks like. And for today, we had, I should say, non-farm unemployment change, 63,000. Forecast it was 50,000. So maybe a little positive for the market. We'll take a look in a minute. ISM service manufacturing coming at 9 a.m. Then we've got the crude oil inventories at 9:30. And that's it for today. Tomorrow we have unemployment claims at 7:30. Then let's see what else we've got. Friday, I think then at 7:30 we've got a glut hourly earnings month over month. Core retail sales, non-farm unemployment change, retail sales month over month, unemployment rate, that is before the market opens at 7:30. After that, business inventories at 9, some Fed speak at 9:15, and then that's going to be it for the week. Let's get into earnings for the rest of the week here. Today, Broadcom is going to have earnings after the close. That's it that I think that will potentially give a little spike. Tomorrow we have Costco after the close. I don't see anything before that will move the market, anything or shatter in there. I think everything is all focused on what's happening with Iran and how it's going to be handled after the missiles are done flying across the way there. Let's get into broader markets and futures. If you're new to the channel, subscribe to the channel. Hit that thumbs up button, like this video. And then hit that bell so you can get future notifications on videos that I make, as well as if you go down into the bottom area and you hit that more, the word more, you go down in the description, you can join our Discord community where we do live trading from 9:30 a.m. to 11 a.m. Eastern time. And then there's also other videos and educational videos that we are posting. And then we're going to start to create some other mentorship days, workshops along the way. So stay tuned for that. Anyways, like I said, trying to steer a step higher here right now. We are kind of dangling with yesterday's high, and then I would say in order for the ES to get any kind of momentum, we're going to really need to regain this 20-day SMA. And today the 20 is sitting at 68.94.99. So we're definitely approaching that. This is a gap down level that I have here. I think that you may get some resistance in here at 68, 66, 75. And then, and that's a weekly low from December of 2025. So you're going to see possibly something give way there. But if you can get above that, you're going to have another line to get in front of 68.79. If you can get through that, and then we get through this regressional trend line that I have sitting here, and that is from February 13th. Then you can push towards this 50-day SMA at 69.1328. If you can push through that, then I think it's clear sailing, and we can start pushing back towards the all-time highs again. On the downside, it's big level that we held this January monthly low at 68.1450 right now in the pre-market. So I would say pay attention to that level when the market opens. Because that also coincides with September's monthly high at 68.14.5. So big level right here. You can see the market got through it, came down, respecting it right now in the pre-market. So big level, positive, bullish for today right now. It looks that way. So you want to see us get above and hold above yesterday's high, which we're right at it right now, which is 68.49.75 in order for us to push higher. So in this channel right now, find out which way it's going to break. So that's pretty much about it. If we do lose that 68.14.5, then we're going to come down and test this regressional trend line low again at 67.71.5. But things seem to be bottoming a little bit. So hopefully we can get some positive news out of everything that's happening in Iran, and hopefully that the bombing will stop and they can start rebuilding quickly. So let's get over to the SPY. If you're new to the channel, subscribe to the channel, go down into the description area and join our Discord community. Also, don't forget to hit that thumbs up button and like this video. Same thing on the SPY. Definitely stair-stepping higher right now. We're at a line in the sand right now at the 682.81, which is February 18th low. So usually when you break a level and it comes back, it's a break and retest. So big level here today, you know, so even though we are rallying here in pre-market, this could be setting up for just a break of this level. You see, we broke the low, and now we're coming in. We tested it here. We broke it again. We could be coming back and testing again. If you get a nice push up, and then this now resistance level will become support. So if we get above that 682.81, same thing on the ES, you're going to push into that high from February 13th at 686.37. So this again, you know, this coincides with yesterday's high. So we're dangling right here on yesterday's high. I don't want to cloud this up, so I'm going to get rid of this. So it's right at yesterday's high here. So in order for us to push higher, you're going to have to get above this high and hold the high and then push higher. And then I think the big line in the sand is going to be Monday's high up here at 688.62. Probably get some resistance up there, but if you push to that, then you're going to start pushing towards those all-time highs again. On the downside, if you lose February's monthly low at 675.78, you're going to give back everything from yesterday and come back down here and test this regressional trend line again that I have at 671.20, and that's a lower end regressional trend line from December of 2025. You lose that level, you come down 667.34, which is September of 2025 monthly high. That's pretty much it on the downside there for the SPY. That should cover all the up and the downside there. Onto the NASDAQ. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, please. Don't mind sharing the video also. If you want me to cover something else, what I cover normally, you know, you could see what I cover every day. It's pretty much rinse and repeat. I cover the ES, I cover the SPY now, I cover the NASDAQ, and I cover the Qs now, and I also cover Tesla levels, and then I do Tesla options, and I go over the 5-minute opening range trade. If there's other equities that you'd like me to cover, feel free to leave it in the comments down below, and I'll be glad to cover those. I do not cover any penny stocks, though, just forewarning there. So anyways, onto the NASDAQ. NASDAQ here, we got to regain this 20-day SMA in order to get some confidence on moving higher. 24,978 is going to be where the 20-day is going to open up right now. You can see we're just below it right now. Same thing as all the rest of the charts. They're showing that nice little trying to fight and get us a bottom here. Do I think that we're the bottom is in right now? You know, I think it may be a little too early to tell because I'm just not quite confident that the bombing is quite over yet in Iran. And I think every time there's more bombing, I think it's just going to create more instability. But anyways, here's this gap up or gap down that I had here, and so it seems to be resisting that right now. So the same thing that we have on the other charts, you're going to have to get above this Monday's high in order to have confidence and start pushing higher, and then push into this 25,152.25 level. If you can regain this 25,152.25 level, I think you're going to start pushing and start getting your way back into some positive territory. Get back into the 50-day SMA, which is sitting at 25,430, and then back into the 100-day SMA at 25,498 on the upside. But first things first, you're going to have to regain these levels. We are currently above yesterday's high, so that is a positive for the NASDAQ. So we'll see how that holds up at 24,850. So you put that on your charts here, so you're at yesterday's high. So this could be a nice little break of the high and come back down and retest. And currently right now it's respecting it, but when the market opens and the volume picks up, it could push right through that. So you got to be careful with that. So I think if you do lose that the high from yesterday, I think it could come down and maybe test yesterday's close. That could be a good entry also. You could see how the market and pre-market, it came down to yesterday's close and it respected it and pushed its way up. So there could be some upside coming today. So, but be careful. You know, I don't think it's. I think it may be a little too early to tell that the lows are in. You know, we're still respecting this July high of 24,300, and then it did regain this August high of 24,495. You could see in pre-market how we broke through it, we came back down, and just like, you know, right to the penny. You know, I didn't do anything with these levels. I just opened up my charts today. These levels were still intact, and it still respected that. So you could see they're stepping higher, right? So you're making you know, a higher high, and you're making a higher low, right? So higher high and a higher low right here. So It is stair-stepping higher right now, pre-market, so that is positive. So let's get over to the Qs and finish this up. Again, new to the channel, subscribe to the channel, hit that bell for future notifications, and like this video. Same thing on the Qs here. So Qs, we're pretty close here. This monthly low from January of this year, 607.5, could give us a little trouble. But again, if you can get through that level, then you're going to push through, and then you'll come through Monday's high, which is also February 20th high. It's 610.12. And then you'll probably get some resistance there at first. But if you can get through that, then you can start pushing through to these upper levels. Let me get rid of this level. I don't like that. This 100-day SMA sitting at 614.67. And it's right on top of the 50-day SMA at 615.77. On the downside, if you lose yesterday's close sitting at 601.58, you'll come down to the December monthly low at 628 to see if it gives you some support there. I'm not sure. I may probably take this level off after today. I'm going to see how it responds. I usually like levels that respond like this. You can see how it came down and it held it really nicely there. So if you do lose that 628 level from December monthly low, I think you come down here to a better level, 596.46, which is February 13th's low. And then below that, you have February's monthly low at 594.76. So hopefully we don't get any downside. I like when the markets are pulling, starting to move up. So let's get into Tesla. Actually, before we get into Tesla, let's look at one thing here that I showed the other day and I didn't show yesterday. I'm going to keep showing it here. Let's see if we got it up here. No, we'll go here. We're going to pay attention to the VIX. So the VIX is the volatility index. So it's good to show the volatility index. So you can see yesterday how it spiked and it fills these gaps. So I had this on the chart yesterday and I forgot to put it on the pre-market analysis, but you can see the VIX. So when the VIX spikes and it's going higher, that means that the stocks, they act in an opposite way. So if the VIX spikes, so if we look back here, I'll show you, let's go days here. This spike that we have back here, this is Liberation Day. The VIX got up to 60, okay? So when Trump came out and he announced that he was going to put all these tariffs on there, the VIX shot up to 60. And we all know what happened to the markets then, right? Okay, so you got that kind of spike right there. That's actually, it creates an opportunity, right? And so there's all different types of times when the VIX spikes. So here's a spike, the most recent one back in, when was that? That was back in November, the Bitcoin glitch, and it was in November of 2025. That sent the VIX up to 28, okay? Now we had a spike in the VIX from our Iran war, which shot up to 25, right? And so now what happens, it creates a gap. And so the gap up, right? So now these gaps fill. So now when they fill though, they usually use that as a level of support and start turning the other direction, right? So there's other gaps that I took off the market right now. However, it's good to see the VIX pulling back right now. If the VIX does pull back, you could see probably at 1974 is a 20-day SMA. So it acts the complete opposite. So if the VIX pulls back to the 1974, so if you have that on your charts and the markets are rallying, you may want to take a peek at things and may want to, if you're in a position, may think about exiting that short-term position. But if you have a long-term account, my advice on that is don't try to time the market on a long-term account. Just set it and forget it as long as you have good stocks. So, anyways, that's what I wanted to show you on the VIX. The VIX, it's definitely a good guideline to pay attention to the overall market here. So, anyways, let's get into Tesla. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. Tesla. So what I have here on Tesla right now, this is the 20-day exponential moving average sitting at 395.51. We did respect that in pre-market. It's holding there up high. I've got up at 412.14. I've got the 20-day exponential moving average, and that's kind of sitting right above the 20-day SMA's simple moving average. So Tesla is definitely trying to steer a step higher right now. So it's a good little push here. I would say the same thing on Tesla with the rest of the stocks. You're going to have to try to regain Monday's high at 404.54. If you regain Monday's high at 404.54, I think it's just going to be a straight shot up to 412.14. On the downside, if you lose, you must hold this 395.51. If you lose this 395.51 level, I think you're going to come down, at least test yesterday's close, sitting at 392.43. And then if you lose that, you come down and you test this 200-day SMA again, sitting down here at 391.23. And if you lose that, you come down to this 387.53 level again. So hopefully things are pushing higher right now and just grind itself higher. So that's good news for the market. So let's take a look at what we are going to do for our options play today. So yesterday, if you take a look at, I think, let's see what we had here yesterday. Yeah, so yesterday it was just a one-way play here. It was a good play on the downside here. On your 5-minute opening range trade from yesterday, you had 392.63 for the low, 396.34 for the high. So once you broke your 392.63 level, you could have taken your short. So okay, it actually kind of gave it to you right away. So you got it on the after 15 minutes of the market, you got your break. You had a little bit of a pop, and then it never really looked back. And from 392. Could have gotten about $7 out of that move. So that was a pretty decent, consistent move. I thought we were going to continue to go further. I made some good money on this trade right here, and then I gave all that money back on this move right here because I thought we were going to turn around and just bounce and go south again. But that's trading probabilities, and you live to trade another day. So today you're going to have to, I would probably utilize this trade from here. So the high from yesterday, if it does pull back, it could be a break and retest from the 5-minute opening range trade from yesterday. So there's a lot of different ways that you can play this trade. So the high from yesterday was 396.34. So you could potentially put this on your chart for today, 396, and it actually kind of comes in to this 395.48 level. So if the market does pull back, this could be a good level to take a long on the upside, right? So that's something to play, but I don't really do that. I don't use the previous day's 5-minute opening range trade. But it's something that you can do. So, but for today, I'm going to start off. I'm going to have actually 4 expirations on here. So I'm going to have today's expirations. I'm going to start, the market's at 400. So I'm going to change this for today's expiration date because now we're rallying pre-market. I'm going to start out with the 405 calls that expire today. So even though they closed in the 45 cent range, because we are now having it like we're $8 above the close yesterday, this is going to open up in the range that I'd like, which is probably going to be $3 range, maybe a $2 to $3 range, okay, or maybe even a little lower. So I may have to adjust that when the market opens. And then on the put side, 395. I'm going to start with the 395 puts. You can see it closed at 520. But because the market's rallying, this is going to open up much lower too. This may open up in the high 2s, maybe low 3s, okay, because the market's rallying on the put side. So we'll see. I may have to adjust that once the market opens too. I may have to adjust that to a $400 put in order to get the premium price high enough for me to be interested in. Because if the premium price is too low, it moves in pennies, and then there's not enough interest in there for liquidity. So that's the second part that's important. My other trading platform that I'm going to have up here, I'm going to have Friday's expiration date. I'm going to have March 6th expiration date, the 410 calls. So you can see they close at $1.13. These will definitely open up, I would say probably in the 3s now that the market's rallying pre-market. And then I'm going to have the 395 puts, and you can see that they closed in the $8.05 range, but they're going to definitely open up lower, probably I would say maybe $3 range in the premium side. So I'm going to have those also, and I'm going to just see how how today's expiration dates are trading. If I don't like the way they're trading and they're too volatile for me, I'm just going to go to Friday's expiration date. And why do I do that? Because if you give yourself more time on when it comes to options, it's represented by theta. And theta is time decay on your premium. So when you're trading 0 DT, which means 0 days till expiration, these premium prices they're all tied to the price fluctuation. So for every little price fluctuation here, these premium prices move, and you don't want to be in a position where all of a sudden you have a big flash candle, and then it wipes away the premium 40-50 cents in one little second here because of a flash move. So when you have your expiration date further out, it buys time and it prevents that from impacting your position. So that's pretty much it. And the reason why you want to potentially have your expiration date further out. However, if you're trading 0 DT, these premium prices, if you're on the right side of it, they move very quickly and you can make a lot of money. Now, flip side, you can lose a lot of money as well too if you don't really know what you're doing. So, but anyways, come on to the Discord channel with us and do some live trading with us, and I'll show you how I do it and how I protect myself on every trade. Again, if you're new to the channel, please subscribe to the channel, hit that thumbs up button, like this video, and then come down and hit that more button so you can join the Discord community for live trading from 9:30 a.m. to 11 a.m. Eastern time. Hope to see you in there. If I don't see you in there, have a great and safe trading day. And if I don't see you in the trading room, I will see everybody tomorrow for the pre-market analysis. Have a great day. Talk to you soon. Bye.